Hi everybody, it's Mark here at Teslary, and Tesla had a decent day, it had a decent morning, and it had an okay close. And it was really just the whole market reacting to the conflict in the Middle East. But the closing price was $263.62, which is a rise in share price of $3.95, or about 1.5% on the day. Which, I would say that's relatively good considering what Tesla is fighting against. And that's kind of like this coordinated effort. I don't know if it's just like from all angles, it's from when you're talking about Elon specifically, you're talking about the current administration going after him really hard. I mean, just recently, I believe the SEC is suing him to force him to be, I don't know if it's like deposed or if to testify in regards to his accumulation of his Twitter position before the ultimate purchase of Twitter, or him making the offer to take it over. And when it comes to just the Tesla company side, like you're looking at all these analysts who are, it seems like it's just coming in like this one big wave of people not really downgrading the stock, because it's not like people were very bullish on it in the first place. It's price target reductions kind of across the board, even from the people in the community, in the Tesla community, would talk pretty highly of. Let's say Deutsche Bank meeting in person with the board of directors on a constant basis, touring Giga Berlin, only to find themselves releasing a report in mid Q3, talking about them understanding the shutdowns for the factories for the new models and upgrades to the assembly lines, and the changes to the Model Y and the Model 3. And then coming up towards the beginning of Q4, talking about how they're going ahead and reduce the price target for the stock, citing things that they figured out really in June of this year, 4 months ago. And so I think it's just the establishment just doesn't like Tesla because it's associated and owned by Elon. It sounds conspiratorial, but then you just look at all the lawsuits filed by government agencies against his companies. But anyways, let's talk about price action first and foremost. We're looking at Tesla, and what you want to do is, like, we talk about like drawing horizontal lines, and I sometimes throw in some diagonals and trend lines just to kind of better illustrate what are price action patterns. But really, horizontals are very important, and you can kind of see how that really comes into play. So we had this horizontal. I didn't draw it all the way over, but if you did, it's basically very simple. What is this red line? This red line here, that's going to be the basically top of the gap. Now we shot through that gap, and what's really good, and we talk about this a lot, when Tesla sells, the one thing you really want it to not do is get into areas where there's low volume, or not get into gaps and fill them. Because I think that in itself really shows what type of order block you're dealing with at the top of that gap, or whatever gap you're speaking of, and the interest that keeps it from filling gaps. I think that's a very bullish sign of how Tesla usually operates. We saw that in action during the run up into the summer. That was not really respecting any horizontals when it was selling off, and it was just like no gap fill, just on the way up. As far as today's action, we were talking about an EM, and we like to put our EM somewhere in the area of near $5 strike increments, and because in those $5 increments, they're associated with strike prices and Tesla options. We put the upper EM somewhere around 270, 269, 269 and a half basically, because I'm seeing lately how it's not really perfectly touching strike prices sometimes, just like kind of coming up a little under as far as trying to get out of this kind of bearish position. So when we get more bullish, then you probably see what happened is if it's near, let's say 300, it might go to like 356, 56 cents, $300.56. But if it's a little bit more of like a bearish kind of context, it would be like 299 or something like that. It wouldn't really do really clean touches, or it wouldn't even shoot past them. So it wasn't surprising, and this is actually when I took a short, and the short the theta kind of got to it, so it wasn't as pretty as it was when the initial sell-off happened. But this was kind of a really good opportunity to see, like, when you see that resistance happening, this is where it's obvious, because it's so close to our upper EM, that this is where you want to go short. Or this is where you want to sell a call. And we talked about that, a couple days ago. When we get to 270, when we get to the upper EM, I think it's a clear sign that that's when you want to sell a call. We even talked about that at 265, that that could be a point in time where on a short-term basis, you can start covering your base, your position Because what do we have? Tomorrow we have PPI. Thursday we have CPI. So we have 2 inflation reports back to back. Well, they're always back to back, but they're coming this week. And these are good opportunities for you to get hedged up. So we talked about 265. What? I'm not like a magician. It's just a $5 increment because, and I think this was illustrated. I think Alexandra Mertz, she posted on X, kind of just saying the volume of Tesla's options that are traded are so dramatically higher than every other single sticker. Like maybe double that of Apple, really, is what she was saying. That it's so influenced by the positioning of people's options that they sold to you guys. So, all these market makers are selling you these options to make money. They're trying to sell premium and they don't really want it to ever get to the point where they're in the money. So if we were calculating what the market's EM would be for the week, we were thinking it's around 270 because that's probably what they want to sell on Friday of last week. They want to sell you guys a bunch of 270s because they're going to defend that. And how do you defend it? You just have a position or you short the underlying. So if they sold you a bunch of 270 Teslas, they're going to defend it by shorting at that point or selling everything they have at that point. And you can see that sharp sell. But like I said, at the same time, this sharp sell was this was like a market wide thing, when a lot of tension with the upper side or the northern side of Israel towards, is it Lebanon? They're having clashes with Hezbollah. Hezbollah says it's not really them, but regardless, it is what is that risk to the market? It's saying, okay, now we're going to have like a 2-front war. Israel's pretty familiar with having a multiple front kind of battle or war that they've been attacked from all sides, from a pretty consistent basis for a very, very, very long time. And you can even go back a couple thousand years. So that was kind of what happened to the market around this point in time when these little artillery and rocket barrages back and forth between Israel's northern border and Hezbollah sitting in Lebanon. And so that's kind of what the market is dealing with. So when I say that, there's some adversity that Tesla's going into, that it's faring well, that it's doing good considering that, overall, the market, it's doing good considering the risk, the global risk that people talk about. And if you go on Twitter all the time, you can hear people say it, okay, why is the market going up? This doesn't make sense. There's a war going on. Well, to be fair, last year, there was a war going on in Ukraine. The stock went up in the spring. Stocks went up. It had a 5% sell-off. We showed you guys that yesterday on the S&P 500. On the S&P 500, a 5% sell-off on the index, that's huge. I don't think you can see that nowadays because so many people are trading 0-day to expiration options. I think the whole advent and the whole because it's so cheap sometimes to hedge your position. Like back in 2022, you could have those sell-offs 3%, 4% pretty consistently. But as of December of last year, when every single day is an expiration for the QQQ and SPY, and of course you still have your futures and SPX options that are daily, it's just so people have so much more access to it. You're not going to sell the index 5% on a day because someone probably just bought like a buttload of options for 2 cents each, and they're going to become a millionaire because you sold. No, they're not going to do that. But that maybe that won't happen again. But we kind of did have we kind of had like a little weaker open and recovered really quickly for Tesla. And why did we have that weaker open? So let's go to the news real quick and talk about what has been happening just this week alone. And it's really these price target cuts. And I'm so tired of these people, honestly. Like, here we go. This is from Monday morning. Wells Fargo reiterating their equal way, but cutting price target from a 12-month outlook to 260 from $265. And look, where do these people get off? These are the people, Wells Fargo, that have been probably fined by the government for the tune of tens of billions of dollars because they're essentially enacting fraud against their customers. Was it a couple of years ago when they were just literally making bank accounts customers who had bank accounts, they would just sign these people up for loans and credit cards so the salespeople can hit their quotas for the month or for the quarter or whatever, all the pressure that their bosses are putting on them. That's hilarious that these people, okay, I'm not going to shit talk them too much. Well, what do they say? They just believe that near-term delivery growth would be driven by price cuts and hence compression of margins, and that they see more price cuts happening later on the year. Actually, this is a funny thing. We do talk about that ourselves, so it's not like I don't disagree with them. It's just like where do they get off? doing anything, not even in regards to covering Tesla, but covering anybody. They should maybe cover themselves first. Okay, so this morning though, we had a double whammy with UBS and Jefferies. Now, where does UBS get off? Really, like they're basically in cahoots with their government, buying Credit Suisse to save themselves, to save their country. Like I don't care about anything of what they do, but they did reduce the price target by $24. Philippe and Jefferies then reduced Jefferies' target by $15 to $250. So okay, so Huchis also cited in this article saying he raised questions about the fundamentals of Tesla. Basically, the earlier profit edge, was that a structural or timing difference? I'm not sure if he's really referencing like the margins that we saw during COVID. That was really a supply thing and timing as well. Structural, is it something that the Tesla as a market kind of had like EVs cornered on? But I think, the fundamentals that these people are talking about are they're thinking about a business that is not selling expensive Model S's and X's at high margin. That's what got Tesla off its feet. But it's not how Elon really foresees the company in the future. He sees the company being a volume company, making a lot of cars to sell a lot of software, to sell a lot of service. And the market's always going to be like, well, we want to see it before we include it in our calculations. So, they can't help themselves. They're not going to really forecast something that maybe has been promised for too long, be it full self-driving or the Cybertruck. They're not really interested in getting burned by that. I can see it both ways. But regardless, Hucha said Jefferies also cited eroding profit margins, just like what Wells Fargo stated. The thing about it is including full self-driving. So they made a comment that initiatives like leasing full self-driving aren't ready, and they wouldn't offset the broader business because of that. And that's fair. Like these are all things that are kind of unknown. But I always say it all the time, and I think I've heard someone mention this to Gary Black on the Cyberbulls podcast with Herbert Ong, and it's like, how do you analysts have Tesla at this PE? How do you have analysts have even Tesla in the mid 200s in the first place if you're not really accounting for future higher take rates of full self-driving? If you're not thinking about full self-driving, driving margins when it gets a full release, and that would hopefully be near term to make your price target $200 something for Tesla. You're not really factoring in a rapid growth in the energy business. It is solely a car business, and then I just don't see how they justify the price targets in the first place. So it just seems like, is this them saying, and you saw this with UBS over the summer. It's like, okay, Tesla has a rally, and then they cut price because it went up too much, too fast. And Morgan Stanley did the exact same thing. A lot of people did the exact same thing. Goldman Sachs, I believe, did it as well. So is it just, Tesla is stronger than the market, it's been outperforming, we need to take the expectations down a little bit for our client base because we don't want to get them too excited, right? Who knows what it is? But at the end of the day, it's not like people like Tesla. Anyways, let's go back to the charts. But anyways, so looking at Tesla, firstly, I always like to note if you see any buying in the after hours, because typically what Tesla is doing in the after hours is like selling off $1 or $2 in the after hours. So seeing it up a couple cents, I personally think, I know people don't agree, but I personally think that's always a decent sign that the sentiment that drives Tesla remains. And that sentiment is going to be retail sentiment, because if analysts are cutting Tesla back in all day long, and you're seeing like 4 or 5 in the past week, price targets being cut, who's buying? And you're seeing, what I think you're seeing is really like a Cybertruck euphoria. But I guess I'd like to temper that. I listen to a lot of spaces and read a lot of news on Cybertruck and Tesla in general. Obviously, people are saying that there is no date set for the Cybertruck release. Of course they have. You're seeing Cybertrucks everywhere. You saw that sick Baja video of them racing down the peninsula in Mexico. But from the internals, they don't have a date set at all. And if you're having an event, let's say you're having a party at your house, and you're inviting guests from out of town, let's say from like across the country, Maybe it's some type of important party. Okay, I don't know. Your retirement party. Anyways, but you want to give people a heads up. Like if you were to have a party inviting people from a long distance away, how many weeks would you give them to prepare? When it comes to weddings, it's months. It's years, right? When it comes to a Cybertruck event, people need to do what? These are just regular, ordinary people. Of course, they're probably going to, drop everything on a dime to try to make it. But these people still have jobs. They need to see if they can get off time for. They need to get plane tickets at a decent price. They need to get hotel reservations at a decent price. How many weeks do you give them to really prepare for the event? So, from the looks of it, and I would say if I was an event planner with Tesla, if I wanted to, of course, give people enough time to plan, give ourselves enough time to get ready for the event and have enough Cybertrucks for delivery. And we're not seeing that many Cybertrucks being built. I think we've seen 2 yesterday, 4 today, based off Joe Techmeyer's drone videos at Giga Texas. I just don't see a delivery event until at the earliest middle of November, 4 weeks out. And that doesn't mean you will have mass deliveries. You'll have deliveries at the event. Sure, maybe you deliver like 100 trucks to people across the country. But as far as mass deliveries for the end of the year, like how many can you ramp up by the end of December? With basically a month or so of production time, maybe a couple hundred. I don't know. So I think we need to start tempering expectations until you start seeing a large volume of trucks being actually produced and coming out of that factory, sitting in those end of line lots out of Giga Texas. I think if you don't see that in the next couple of days, that we probably won't get an announcement this week, right? If you aren't seeing trucks come out, and maybe we need to see 25 come out in one day, and then you can say, okay, maybe we'll have that event announcement, and then you can have kind of this like euphoria in the stock reflect even more so. Like you would break through horizontal levels that I don't even know where we'd stop. Like we already touched the upper EM on a Tuesday, right? Like if you want to range between the upper and lower EM, that's a 6% drop, going to 247. But from a very bullish side, taking out what levels? Like let's kind of draw them out. Let's say Friday is the delivery announcement, and you kind of want to take out 275, 270, and 280, and those are going to be just obvious levels that you really want to watch that line up with really sharp sells in this kind of double top pricing that we had after Adam Jonas's upgrade to 400. Well, that's really a price target change. So not great from the Cybertruck front, to be honest. And I've been pretty bullish about the Cybertruck thing lately. Seeing the Cybertruck being crash tested, seeing all the people driving all around California, and really there's some in Florida, there's some in Texas, there's one in Washington. They're everywhere. And I really wish we would see a little bit more communication. We talked about yesterday why we don't. It's kind of an Osborne effect. You don't want to ruin sales for product that you have currently being made in inventory. That would really hurt if you get people amped up for a product that just isn't able to be purchased in mass, right? Because if they can only produce 1,000 trucks this year, then people might feel the need to wait, and they don't want to buy a Model Y, or they don't want to buy a Model X and just want to wait a year to get a Cybertruck. That would be detrimental to sales for Q4, which are under a lot of pressure already. So you have to kind of balance that. So it could even be more strategic that you push Cybertruck into Q4 as much as reasonably possible, so people will buy whatever they think they might be buying, just if they want to get themselves into any Tesla. Thinking about this though, at the same time, what happened when the Model 3 Highland was released? Okay, everyone was sitting on Twitter, sitting in spaces, getting really jazzed up for this sick car. The car is, great looking car. It's more range. It's more efficient, more aerodynamic, quieter. Suspension's more, I don't know. It's not. It could be softer, but it's just a better suspension geometry, really, on the Model 3. And everyone was sitting in spaces. Sawyer was there, Omar was there, and we were all talking about it. And then, a couple hours later, price cuts on Model S and X. Standard S and X removed, and just massive price cuts across the board for the remaining models and trims. So, and what do we call that? in like, what do you call that within in any situation? It's, you have great news, and then but you have bad news too, right? So you lessen the blow with the bad news by having good news at the same time, and then the stock sells off regardless, right? That's a shame, right? But it was going to happen anyways. Was a double shame is we didn't really see that reflect in increased deliveries for the X and S. Due to the price cuts, but at the same time, we talked about how that could just be more configuration problem with models and inventory. They can't have any options. Otherwise, they would be over the IRA limit for the $7,500 credit for the Model X. So it could have been just like the only way you can get that discount is to have a new build on the Model X without any options, right? So at the same time, we have earnings next Wednesday. And if you think earnings might be bad, now there's some people, some analysts in the community, not in the industry, not Wall Street analysts, but analysts in the community that are thinking that even that there's going to be a lot of stress put onto this on earnings here. And I don't even just mean margins. I mean just overall, just net income, let's say, just gross profit. Let's say any type of profitability could be at stake for some people's point of view because CapEx spend, we're spending a lot of money, right? We're spending a lot of money. We're making factories. We're like, what type of factories are we making? We're making refinery. We're making multiple, we're making a couple battery factories, and we're making the Megapack factory. We're going to break ground soon on Giga Mexico. So there's a lot of money just from that point of view being spent. There's a lot of money from compute, buying a bunch of chips, building out. I know they're building out another server center over Giga Texas. They're building out data centers and buying them and refitting them for, I'm not sure what they're doing it for. There's a lot of spend. And something that was really an interesting note that we heard from Q2 earnings was what? When Elon said, I'm surprised we had any positive cash flow. But the reality is they're designing their spend around using almost every dollar they have. Like, they're using this moment in time to really push the idea that, and you invest in this business now while everyone else is hurting, right? What do you mean hurting? We have strikes going around for all our major domestic OEMs. We have a product that would be competing against our number one EV competitor that's a startup, which is Rivian, and we have a Cybertruck, a pickup truck segment, competitor that will be potentially eating into their sales. So they're trying to use this moment where they have profitability where everyone else doesn't, and trying to separate from the pack, really make that gap between Tesla and the rest of the world as big as possible, right? It's not surprising that when you're looking at the profitability of BYD, for instance, and they had some really record profits last quarter. They're making billions and billions of dollars, but it kind of begs the question, like, what are they doing with the money? Are they just busy making 14 different models and trying to capture all these different types of markets, where Tesla is a little bit more methodical in that approach? Like, really, and especially you can see it how they did with they took their time on Cybertruck, because they really wanted the efficiency, the manufacturing process to translate into speed and affordability in the end product. I think that's a really smart play, where you have BYD who just uses a massive amount of human labor to be more flexible when they introduce new models. So they're not going to have a bunch of robots programmed to make the BYD Seal. They just have 100,000 people that can just tackle it with cheap labor, and they can just make a new model. And if they need to have a new design, they just have so many people that will just do it. But at the same time, they don't have any production efficiencies. Something that their president and chairman Wang Shangfu said in a quote a couple months ago, saying, we want to spend money on our factories. We want to spend money on production. And so he's really looking at what Tesla's doing and saying, I want to do that too. I know we're really profitable now, but if I can, and from the BYD's perspective, if I can automate further, I can reduce my costs and churn out more cars at a higher profit. And they're already lower price than Teslas for what other people will call our similar specifications. Obviously, as Tesla fans, we know these cars are not equipped to do anything spectacular when it comes to the software side of the car. There's no real advanced driving assistant features other than your typical lane change lane keeping assist, or cruise adaptive cruise control or whatever, things that they tout as, advanced driver aids in their promotion, but they're really not. They're just like just every other car. So, I think it's smart that Tesla's leveraging their free cash flow, their profitability to really, put the screws to GM, Ford, and Stellantis. But at the same time, I think that's one of your risks that goes into the Q3 earnings. That's something that you really want to be aware of. And everyone's already forecasting really compressed margins. I think people in the analyst community are there's people around the 16% from 18% from a quarter before. So that's kind of getting worked into, it's kind of getting priced in, even though you're seeing You're seeing a little bit of, we had what type of bounce have we had? Intraday, 15%, but at the close, we're up 12.5% in a period of 2 weeks, which is not bad, right? That's really not bad. That's really pushing against the upper EM over and over and over again. Kind of like stair-stepping pattern. Something that you do want to see when you're looking for something pretty bullish. This is really nice for now. And what you really want to do is you want to shoot right at this point. You don't want to keep stair-stepping because you keep stair-stepping like that. That's not going to be bullish for a very long period of time. You really want to price needs to make a move, clearing out a high, and then we can feel pretty comfortable about Tesla just maintaining a decent price for the short term. That decent price, just high 200s, really. I think that would be relatively okay. But let's look at some indicators. So we understood the price action. This is something that's very obvious. So if you haven't watched my videos before, we kind of guess movements. And most of the time for Tesla, it's to be intraday flat. I would say that's relatively rare. But to be intraday violent makes a lot of sense. You can see sell off, gap down, bought up, gap down, bought up. And over here, crazy move upwards, right? So the movement to be flat, to open flat, to me, it's always very surprising, right? So what we guess is that if it goes up, it's going to do what? It's going to be a straight line up. And I didn't have it lined up perfectly for time as my drawing was going into the end of the week, but essentially this is the movement. So if it's going up, it's just going to go up. I didn't draw any pullbacks, right? Yesterday, what we drew was what? It's going to open right here, which is a slight gap down, and just go, and it won't stop if it goes. And if it sells, these are the kind of actions that we anticipate it selling. Now, you might ask, if you're new, why do you think it would do this? It's just based what? We're just trading with algorithms, computers against, levels of $5 increments, right? So, this is a diagonal, and it's been respected before, so it would make sense that it would get a little bit of buying, but it wouldn't be too convincing, I don't think, because I don't think generally the market really cares that, the price is falling below this trend line, who cares really? But if it does bounce, it'd be weak, and it would bounce off 255 perhaps and close red, but not so bad. But if it does a sharp sell-off, the sell-off will be always quick, right? The sell-off would be quick. If it's like this geopolitical rift that's expanding to a multinational war, then yeah, you would maybe see a touch to the lower EM, sell off a couple percent, and say red for the entirety of the day and flat. So those are just kind of the concepts of Tesla when we're looking at the intraday price action and kind of trying to understand where price wants to go. Let's go to a daily time frame and just look at some indicators and see how we're doing. And you can see that, and you probably feel it, right? You are so familiar with pricing at 250, 260. You know that price because it's been that way for longer than the consolidation in the spring. Like if you were here in this moment, and this sucked. I hated this. I really hated it. And then what I didn't realize is that we had something even worse here. Like this is going on for forever. So this is 130 days of trading essentially, where we're kind of just stuck in this range from $210 to $290, and it's just not going anywhere. Like that sounds like a big range, but that's very common for Tesla to move pretty violently. And do you guys remember? Like I remember this day, earnings July 19th, and when it sold off, we're still below that price by a good margin. And it's been 85 days. It's been the whole quarter, and we've gotten nowhere. We got nowhere. I mean, we got nowhere for years. We're still at the pricing that we saw in January of 2021. Got nowhere. Now, okay, I said we wanted to look at some of the indicators. We're getting a nice curl up on the MACD. That's good. When it breaks through the mean and the average, I think it has a pretty consistent track record of being pretty bullish. You can see that every time the blue line crosses the orange line. You can see it here in January. It never crosses below again until it tops out, right? It crosses over again here. This is the May rally into summer. It never crosses below on the daily time frame. Okay, you see that here? And the breakout from the bottom after the sell-off in July, and it stays above for a good amount of time, maybe a week and a half. And so we're getting that again. We're getting across. And so you typically see at least a couple weeks of relative momentum going upwards. And we can hope for that again. When it comes to RSI, it's been kind of sitting in the middle, nothing really impressive. It's impressive when you compare it to the rest of the market, though, because it wasn't that long ago that Tesla was much stronger than the S&P 500 as far as staying relatively flat or less red than the S&P 500, considering its beta. So let's add the 20 EMA. We'll add some EMAs and kind of see how we're trading on our moving averages. And so we're actually fine. We're well above our moving averages, so it's really not a concern. So all the indicators are okay, and it's really because Tesla has just been trading pretty flat after selling off pretty hard, and that's all we can really hope for until we get some better news. And I really so if you don't hear from Tesla and Elon about the Cybertruck this week, I wouldn't be surprised if they don't say I wouldn't be surprised if they're saving it for earnings, the earnings call. Maybe the earnings will be bad and they buffer it with Cybertruck news, and hopefully they're hoping the stock will just stay stable, right? As stable as possible. Looking at oil's still very flat, so this had a nice pump from the conflict, and I'm not sure if this move is going to be. I don't know how real of a move this is, because obviously, Israel and Palestine aren't necessarily very large exporters of oil. It's really more of a risk when it comes to oil producer countries in the region that might get caught up in some type of sanctions if they were to participate in the conflict. Or looking at Iran, etc. Let's look at yields. So yields had a nice sell yesterday, right? Well, obviously not technically, but a gap down because they were closed for the holiday, for Columbus Day. But yields were relatively flat, but you kind of had a nice tradable. If you enter TLT around here, around 4.9%, you got a good move on a long bond. If you entered a little bit long on TLT, you would have had a nice move on there. I think my move was something I entered somewhere in that area around 4.9%, and the move on TLT on the weekly was relatively okay. I think it was something like 60 something percent whenever I entered my long on TLT. So yields, what do we think is going to happen here? Obviously, no one really knows. But I don't mind flat, but it's kind of double bottoming when it comes to this minute time frame. But yields in a minute, who really cares? I don't think anyone's really looking at that. The 10-year kind of just looks like the 30-year, sharp gap down, flat trade for the rest of the day. And these things, you never know how people are reacting when it comes to yields. So yields really do determine the direction of equities. I think that when yields go up, equities will go down. But at the same time, yields being up kind of means that we won't get rate hikes from the Federal Reserve. So it's kind of hard to decide, like, how do you want yields to really react? If they're flat and higher, then you don't get cuts. I mean, you don't get hikes, right? If yields drop considerably, the hiking conversation will start all over again, and yields just maybe go back up. So who really knows? But I think clarity will come tomorrow when we have PPI, and then the following day for CPI. If we can get some nice moves on core coming down, I think the yields will crater, and that would be great. That'll be great for all equities, I think. To be honest with you, except for maybe energy. Energy might fall in that case. But something really interesting when it comes to the other major indices is that IWM has been having a move for a couple of days now that has been really, really nice, stronger than the market, S&P 500. But that kind of makes sense. Like, you're back in this order block that we defined before. You're back in this now. It doesn't want to make a new low. It defended it, and that kind of says a lot about the IWM, that they're really respecting this level, and it showed. So if you went long IWM, that would have been a great relief bounce. How long does this stay? I think you can see a lot of evidence that until you get some good data, that it can actually trade sideways for quite a long time in some type of flagging situation, and or just simple ranging back and forth for weeks. I think Tesla people know all about that. When it comes to the QQQ, we can look at the QQQ on the hourly and see that it's really had a really beautiful move, and it makes sense where it's stopping at. You can see the sell. It lines up perfectly at 371, which is a peak in pricing before a sharp gap down. And that is not necessarily bad at all to see a close like that, in my opinion. I think it's natural profit taking for the QQQ. When it comes to RSI, it had a very, very weak RSI, so it's nice to see a nice move, and these moves are pretty sharp. It's not really natural to have 4 green days necessarily in a row. Have we done it? Plenty of times, obviously, but there's got to be a point in time where, when it comes to the index's point of view, that it would make sense that before the end of the week you'll have a red day. And how do we think about that? I think that, and we'll actually talk about it on the S&P 500. So we have PPI tomorrow, right? Let's say PPI turns out well, that input costs for producers are generally under control, and PPI can kind of lead CPI by a month or two. So that could be a good sign for CPI the next day. But at the same time, CPI is a bigger risk than PPI. So PPI is coming first this time around. Let's say PPI does look good. In the morning, it opens up good. And let's say the morning opens up, you're up 0.5%, or you're up 0.4%. I think at that, after the pricing, as the volatility settles in the first 30 minutes or so of the day, I think you need to evaluate, like, where's price at now, and when does the typical de-risk happen for CPI. So if you get a move, like you're watching the S&P 500 and you fill the gap, okay, that would be a move of about 1%. If you see 0.9%, 0.8% in the first 30 minutes of trading because PPI was good, just know that typically what happens before CPI, regardless of PPI is before CPI, that there's hedging, there's selling that takes place because CPI is so important when it comes to the market, right? So that could be your cue. This is where I want to go short. I want to take some off here. I want to hedge here. I want to add more hedges here. And those conversations you need to have with yourself. What does that look like on Tesla? Like, if you were to have a 0.9% move on the S&P 500, if Tesla, if it looks really good with PPI in the morning, what does that move look like from today's close? I think that move looks like somewhere in the range of 3%, somewhere around right here. Let's say you get to 270 and you sell off again, right? And you can see that's not unnatural. You saw it happen for many days, respecting the 262.50 area right here. And can that happen again? It can definitely happen again. It happens over and over again where Tesla picks a level. That's where the resistance is. It was 255 before, multiple times. It was 262.50. Will it be 270 or 265 again? Something to think about. But you see some sharp movements up in the morning. I think you want to consider, okay, how do I further de-risk this situation? You don't have to sell all your stock, but having hedges in place when you get to those really pivotal prices of 265, 269, and some change. I think those will be some good moments. 273, I think, not at 275 just because of the level. I think 273 is another a level you want to watch for maybe a fade going on during the course of the day. Let's say PPI is bad though. Let's say PPI is not great, or there's some type of event that happens overnight from the global perspective or something like that, or even Tesla related. and it opens lower, and I think the previous levels still kind of remain. Those are really of interest. You're basically looking at what, 259, 255, and 250. Obvious levels of trying to find support for pricing when it comes for a bad open. Let's say, I think if the open's bad, I think after an hour or so of selling, maybe you can start thinking about how the rest of the market's looking, and maybe you can get another bounce in there. Kind of, we've seen that happen a couple times when it has nice recoveries during the course of the day, but I would say people are going to get really tired of waiting for Cybertruck news. Like, you can tell, like, all this support, this is all Cybertruck related. People are feeling that it's getting close. It's been a 4-year wait for some people, right? So they're getting anxious, and they want to be positioned for this, but people will get tired, and that's just a fact. So, but otherwise, the market looks generally fine. I think the bounce is called for. We talked about seasonality, that typically after a couple percent move in early October, it sells off further. So we've seen at the maximum of 4% almost, but closing price somewhere in the range of 3.25%. And after that move, the move that would bottom out the market would be something a little bit more severe than the gain on the bounce. It would be like a negative 4% move if you see selling start. So it's a small bounce into October for seasonality. It sells vigorously for a couple days on some bad news. CPI can do that and kind of line up with seasonality. Something to think about when you start seeing the data come in for these inflation reports. Just know that so let's go. Let me open up the time frame a little bit so it's a little bit more clear. Some people are saying that this was the bounce that we had for seasonality. It could have been, sure. 2% would be on average, like, fine. And then it sold off more than the gain. It sold off almost 3. Makes sense. Now, is this the real rally? Well, we had a double test. We kind of found a base as best we could. We got bought up and we tested it over and over again on 421, over and over, like maybe 3 times. And you can kind of see it pretty clearly, right? And then you just shoot off 420. This could be real. But know that if it does start selling from a seasonal perspective, it would sell more than where it came from. It would get lower. It would make a new low, essentially. So just be aware of that. All right, guys, have a good night. Thanks so much. And once again, good luck to everyone tomorrow for PPI. Take care.